awesome and well. It is a very challenging time of the year, but we just need to keep pushing through, and we will be there. We will get better every day and every year. That's what we believe. Here you go. So today's seminar, our topic is about end of tax year's planning and our Australian federal budget. I try to make it as informative as possible, so maybe it is too much content. I would rather to remind you this slide is available if you do ask Casey about it. So I may fly through some of the pages, but I don't want to delete the content because that's what I want to deliver as a valuable points or structure to you so that you can use pretty much every year. That's the way how you probably want to structure thinking from now onwards every year. So let's start. Today's topic is, as I said, 2021 end of tax year planning and Australia's federal budget, which just released a week ago. We had the last federal budget released 6 months ago. Now it's 6 months later, obviously is in reaction to COVID-19 and a lot of state level of the changes and incentive given. I won't focus too much about what the government plan to spend on. In your specific industry, you may have already been informed what can be coming as a funding, where the government wants to spend money on. Today, I want to just highlight what the federal budget in relation to personal and business tax planning. So we start with who we are. Casey has already mentioned who we are. We are CPA and registered tax agent. Myself is also a chartered accountant. Our firm is also a licensed financial planner. We have more than 10 years experience in Australian businesses and accounting and taxation. That's my photo. The first section is about year-end tax planning. I want to present in such a way. You might find a lot of information actually online in terms of end of tax year planning. I believe our content is very different. This is how I do it. It must be relevant with you. So these are the main points that you want to think through. First is you need to know which year we are talking about and when is the good time to plan and what you seek guidance from, or what your reference are, and what's your goals specifically for yourself. And then I'll go through our suggested order or checklist for business and individuals. So these slides talking about tax year planning, which date is the end of tax year. Most of the time for Australian businesses is the end of June. 30th of June, but it's not 100% for every business. You can choose, or in different countries have different dates to another date as your tax year. So when I talk about in today's webinar, it's I default assume this is only for 30th of June. When to plan is now. So the end of May to June is the best time to plan. If it is the last week of June, probably too late. So you want to start right now. Hopefully that's what I'm thinking is right after today's webinar, you will take this list and go through them and start thinking when your memory is still fresh and then your brain is still active and you're up to it, because it can be a bit boring. If you're not an accountant, I don't imagine you would certainly have the passion to do that, but keep the momentum going. Will be there and it will be hugely beneficial for you. So where do you seek for guidance and reference? You need to have the most updated interim financial figures. Or if you're in business long enough, you know basically we are referring to balance sheet and profit and loss. You need to have basic these two reports to start with. And also comparison with last year or last period. You also need to have your team on board. If you have internal accounting team, you need to have them. If you have your external accountant or tax agent and financial planner, definitely seek their help as well after this. Next is very important. Before I mention any element, any content, any strategies, you need to know what's your goal. Everybody has different goal. Your scenario is the same with other people's looks like, but then because you have different goals, your two strategies could be black and white difference. So that comes before everything else. You need to have your goals first. So basically, generally speaking, we may talk about 4 areas: compliance and due date, your profit and cash flow, and your debt, receivables, and tax. That's generally speaking, you want to achieve something in these 4 areas. Now we enter the next content of our suggested order or checklist for business structure. So as I mentioned about, you want to roughly review your accounts if all makes sense and correct. Sometimes people waited for too late until July. That's definitely not the right start for any planning before the end of tax year. You need to have the figures up to date to be able to do something in the coming month. You may make wrong decision just because your record is inaccurate. So you need to have a look if everything makes sense in total, up to date. You don't have to look through every transaction, just look at the total if it makes sense. And then that's your start point. After correcting any doubtful transactions and inquiry your accounting team, you update all your figures. Second is very important is data security and backups. You need to back up and make sure your data is secure. Why do I bring this attention as the second point? Because it's so important. It's very important. My personal experiences, cybersecurity is probably the top 1 security for business now. It becomes, even for our firm, we pay separate for our insurance just to cover cybersecurity. If you have a problem with that, it can be a really disaster. So if you look at my checklist, this is number 2. If you don't have a system of your cybersecurity right now, you need to have it now. You need to have it in place. All right. Next one, you want to review what you have done previously. Maybe in the early year of this financial year, which if I assume June is the last month, then July 2020 would be your first month of this financial year. If you have set up any goals, strategies, plans, and then see if it is effective. Last year also, if you have done any year-end planning, tax planning, or something alike, you will want to review if they are effective and what has been achieved. If they are good and helpful, you may want to repeat. If they're not helpful, it possibly be an opportunity for you to change something to make it effective. So don't invent the wheel if it has already been there, but use it. It's very useful and easy to do. Next is what's your goal? We talk about it. What do you want to achieve? And then what is the strategy after the goal? You know what your goal is, and then talk about the strategy. So at this stage, before this stage, I would imagine you already have your updated figure printed as two reports. One is balance sheet, one is profit or loss, as I mentioned about. On the side, on your desk, you have a pen on hand. You put on the top of your piece of paper. That's my goal. And last year, what has been done, and I want to do something again, or I want to change something. That's on the top of your note. And now you have this report in front of you. After you have your goal, you want to know what's your strategy. So your goal, you want to highlight and then circle it so that you know what to do with it. I just want to mention about some of the examples as I listed. For example, just a figure of speech. you want to increase your profit. It might not be in conflict of decrease the taxable income. So you put in there, I want to increase the profit. I want to decrease my taxable income as my strategy, right? And then so in turn, I will reduce my tax to pay, something like that. Was to manipulate, then you will look at your tool report. Go through each of the count, that is the order. You will not miss out 99% of the event happening with your business. That is what we do. I understand you probably know from accounting or taxation background, but if you can go through this, I'm sure you will cover most of the accountants do. So I give you some example. If you want to increase your profit, you look at your profit and loss in order. The account will be, the first account will be your sale, right? And then your purchase, and then your operating expense. What to do if you want to increase your profit? Obviously, you want to increase sales. Yeah, you want to increase your margin, gross sales margin. So see if you can do anything in the next month. Give you a more detailed example. For example, we have a lot of year-end, financial year-end sales happening, just started now. Well, what I can see is in Melbourne, you already can see a lot of board on the street or year of financial, end of financial year sales on the street everywhere in the department stores. So that's part of the strategy as well. You want to get rid of some of the old stock. You want to generate more sales and focus on that. That will be very helpful to increase your profit. Another example would be a service-based business. You might have a WIP built on your record, which is work in progress. If you want to increase your sale, obviously you can issue an interim invoice if it is practical, right? And here I want to step in a little bit further. It may sound a bit strange, but depending on your accounting record method, you might be on accrual, you might be on cash basis. So if you're on accrual basis, generating an invoice will achieve the goal to increase your profit. But if you on cash basis, then you report means that you won't recognize that revenue until you collect the money physically. So that can be a timing difference as well. That's the part to manipulate your sales, in turn, the profit. So there are a lot to think. There are many things and many rooms for you to play around. It's not fix the figure. You can definitely do many things about your financials and record and business performance. I'm sure about that. When I mentioned about depreciation, you realize that's something to do with plant and equipment. If you want to increase this part of the deduction, in turn, reduce your tax to pay, means that you might consider if it is an option for you to buy furniture, to buy some cheap stationaries, if your business need that. If you want to invest in some upgrading of your system, that's all on offer. And also the last, for example, staff bonus. Maybe you can also motivate your staff. Look, this is your up-to-date KPI figure. We have 1 month to go, and I want to give you this incentive if you can achieve that in the next month, so that bring our business to the next level. So I think they're all very useful. And then you can change the business picture in 1 month, sometimes easily, sometimes not. But it is definitely very important for the last month to give people this kind of activities and motivation. I want to highlight the next one is a superannuation. Some people don't know this as a business owner. Superannuation is only tax deductible when it's physically paid. Normal business pay it quarterly. So say, for example, April, May, and June, you accumulate the superannuation for your staff, and you wait until July to pay for it. Well, all of these 3 months superannuation expense won't be deductible until 2022, next financial year. So this doesn't cost you nothing. This doesn't even cost you cash flow, because what we're talking about is before the end of financial year, and July, could be just 1 week's difference. And then you can deduct it 100% when you physically pay. You pay up to date, that will be 100% tax deductible this year rather than wait for the next year. Means that 12 months later, it's not several weeks later, because you only wrap up your tax return next financial year. So this is a big deal. Some people not aware of it, some accountant overlooked it, but I want to bring to your attention. That's an easy thing to do. Also want to bring to your attention some prepayments are also fully tax deductible for small businesses if it is less than 12 months period. Give you another example is myself. So I need to, as a chartered accountant, we normally pay membership fee before the end of June. If I look at my figure and I think, my goal is to increase my profit, well, this year, because every year is different, I can push my bill to July effectively and legally, because for chartered accountant, we need to physically go there to update our information, and then the invoice will be issued to us to pay. So it depends on when you update that information, you can push to next year or bring it forward to this year. It's all legal and fully tax deductible. Last thing is tax incentive, offset, and funding, etc. Like, for example, research and development. Sorry for my abbreviation. So all sorts of industrial tax incentive and funding, you want to look at it now, because just right after the federal budget, there are certain criteria you need to meet to be able to get there. You want to prepare now rather than too late when the financial year finish. It became a historical figure or record. You can't do too much about it anymore. Next, number 6 point. Okay, now we finished pretty much all the profit and loss. So I would imagine for this report, you already highlight, as I said, you go through your account from the top to the end, something you want to do, you highlight, you make a note on the right-hand side. So one report is done, right? And the next is the balance sheet report. Same thing, you go through from the top to the end. Top is your asset, non-current asset, liability, something like that in a big category. So cash on hand, obviously, the bank account, what to do with that when you look at those accounts. You may see, oh, I have too much cash on hand. Do I need to deposit it more often to keep my business safe? So keep the risk down. There's something to consider to review your procedure. If your bank account is too low, is that good enough to support my business to grow? Do I need a different bank account or products like overdraft or credit card? So when you look at this account, it triggers these kind of options for you to think. Especially by the end of June, sometimes the banks and institutes also want to do some sales as well, same as other businesses. So maybe there are some good deals to grab. Next, receivables to be collected, debt collection procedures, and you will think like that. Okay, why do I have so much uncollected receivables or debt from my customers? Does it mean that I need to improve my procedure? Those kind of things is triggered when you look at this account. If there's something really unrecoverable, you might consider to write it off this year by the end of June, because it can be realized as a tax deduction, in turn, reduce your tax to pay, rather than 12 months later again. Next is, after that, there would be some kind of fixed asset. Because I mentioned before in the profit and loss for depreciation, you might already thought about it in the last report, but if you haven't, you will see that on your balance sheet. Or do I have too many cars, right? I'm not using these kind of cars, and then do I just get rid of them rather than wait until the value gets too low in the market? Something like that, you will see this account, and then you will put some notes. specifically applicable for yourself, for your business, right? Next, go through the balance sheet, comes to the liability section. You may have some debt to pay, and then you will think, okay, is that time to negotiate or to refinance, seek for another loan package, etc., etc. You will highlight this and put a note on the side for yourself. So that's pretty much it until number 8. You finish your financial reports review, you put some notes on the side, and then you will be thinking of, okay, from a higher level or from a different picture, I understand where am I standing now, and I know what to do in the micro level, right? And now I'm going to think, what's the trading environment now? What are the deals available? Like we will talk about the financial year-end sales on the market, on street, etc. Any government and tax concessions, for example, last week's federal government budget. And you can shop around for better services, providers, suppliers, insurance, loans, etc. That's only on the top of what you know where you're standing at, because sometimes when you seek for these products, they will want to know where you are. And then the products will only be available to certain performance of the business. So then you can, because you already know where you are, you can talk to them, standing at what kind of position and what's good for me. It's quicker, effective, and productive. And you can actually do something before June or make a decision if I want to do it now or wait until July. So that's why I put this in such an order. I think on the internet, there are a lot of resources for year-end planning. I saw that as well, but most of them are in unorganized, not systematic way. And then people see, oh, this point, oh, good, that point, oh, it's good. But it might not be readily available for you. It's probably irrelevant with you. So I think this is better. I always believe my checklist is always the best, maybe same as you guys do in your business. You think, oh, I'm trying my best, and this is different from anyone else. I would be offering a better service or idea in these regards. So I hope this makes sense so far. So the next one, what we're thinking is what options you have. You already see what's available on the market, what you come up with your own thinking, and then what options do you have? What do you want to do then? So you might have 10 ideas already, and shop around, you have another 5 ideas and what you can do. You may not be able to do 15 things altogether. You may want to focus on several things, and then you circle them. I want to do this. Okay, 3 things in total. All right. How much fund do you have in supporting your actions around 30th of June? So if you want to do this and that, oh, I want to buy a new car so that I can write it off and reduce my tax to pay. If that is your idea, then do you have the initial payment or do you get a loan? Do you have a fund? Do you want to pay in cash, etc.? So you will, based on that option, you will look at this point, how much fund do you have in supporting your actions before the 30th of June, or rather than later. So the next is much, again, after everything is much higher level of your tax planning. You want to review your tax structure and then see if potentially you can do something on that level. For example, if you have multiple companies, some trusts and related individuals, you yourself, your spouse, and maybe your children as well, and your family trust, you want to review your related entities transactions if there's something you want to do about it. And now you would have already have some estimated figure what to distribute as a profit or dividend or trust income. And then finalize your action plan. As I said, well, you already have your goal, action plan, your circle strategies, maybe 5 of them, and one is not supported by your current position. You only want to do 4 of them now. You finalize your action plan in order of time and priority. Have a separate paper on the top of that. So this is very clear. You understand what's happening, and then you can take action. Before you take action, you need to consult with your accountant or accounting team, financial planner, your tax agent, because they may have a very valuable and essential contribution about it. And then the last is get ready. If everything is good, you already take plan, you already start to do these things before the end of June. If you still have some space and energy, you want to get ready for the provisions that end July compliance, such as wages and super. So that will pretty much cover everything. If you can go through this checklist and do maybe a quarter of them, it will be massively helpful for you. And that's the value I want to deliver. Right. Next one is checklist for individuals. I highly recommend this website. It's government website. It's really reliable and open your mind what to do with individual situation. So roughly same as business, you want to review your financial positions, what you have, what you own, what your income is, and what you pay for. And if you don't have this kind of mind or structure or template, you can ask for some template from a financial planner. You might have already made one from your financial advisors previously. It's called SOA, Statement of Advice. You already have one. And then you can compare your current situation with your historical figure and see if anything changes or update. So collect tax information. My client always asks me, what tax information should I collect? It's easy. Look at your last year's tax return, pretty much similar. But because tax return has their items, even though you may have zero there as well, but it's a helpful checklist for you, available free for you to follow, collect the tax information from there. And then, of course, what's your goal? Same as business, what do you want to achieve? Maybe you want to buy a property so that you want to get a finance, or I don't want to get into any investment now. I just want to start saving, or I just realized a capital gain this year. I want to reduce the tax because it's too high. So everybody's situation is different, so that your action will be different totally. After you know your goal, you know your strategy, what I may want to do, get some advice at this stage from your tax. It's a different order between individual and business. At this stage, you want to check with your tax agent, financial planner, what to do. What should I do? I have this scenario. I know what I'm standing now. What should I do? Is my strategy effective? Is that okay? Or what do you think I should do? I can as options. And next is more or less tax deduction to make. Say, for example, you can always manipulate this. If you want to reduce your tax, you only have wages. Obviously, you can spend a little bit more on work-related expense before the end of June. Training courses to enroll as is work-related expense as well. Extra super contribution as a tax deduction. Repair and maintenance of your rental property super co-contribution. Government will give you 500 max. Spouse super contribution is another thing you can consider. Many things, even though they may look very small by itself, but it add up together, then can save you a heap of money from tax. Next is a very special one. It's a capital gain or loss. If you have a big capital gain, if you have the option to make a capital loss to offset that, you can do so. Sometimes, give you an example, you have a property, rental property, you sold it because we have a booming market right now. You sold it, but then you check with your tax agent. The tax agent told you, that's $20,000 tax to pay. You realize I didn't prepare for this. What should I do? By the way, I have some shares in the market, didn't really perform well. I want to get rid of them. This is the right time because the capital gain can be offset by capital loss. If you sold your share that you held for more than 1 year or probably 5 years, and then you wasted your time and you'd rather to do something else with that money. That can reduce your tax by mass. Next is refinance or consolidate your existing loans combined with your tax planning. Would you rather to do it this year or next year? that's really sometimes it is essential because that will affect your assessment with the bank. Sometimes it's not really achievable this year, so you rather to get a lot of tax deduction this year rather than next year, and then you wait for the next year's figure, get ready to get an investment or get a loan. Number 8, financial year-end deals, same as business. You may grab some deals happening. And last is New Year's resolution, obviously. After this, after you're planning, oh, okay, you realize what's happening. I wish I could have done that and would have done this. So this is the time to have a New Year resolution, which just right after you realize your position. Okay, the last section about this seminar is the Australian Federal Budget 2021 to 22 and the interaction with the tax planning. I only want to highlight something. I don't want to mention everything, as I told you about in the beginning of the webinar. I separate this into 5 sections, and hopefully it's clear enough and not too complex. The first part is businesses. I want to highlight this one is the extending the full expensing of eligible asset. So that's about write off a big asset that you purchase, like a car, like equipment, like a big plant or machinery. So I listed here. I may not have enough time to go through all the details that are written here, but I think it's very important. If you think that can potentially be useful for you, I hope you read about at least my slide. Be aware, this is a time benefit. It's not a benefit absolute with the dollar value. So you can actually choose this year or not. If you can, you will think which option is good for you. Never buy plant and equipment only for tax benefit. It must be able to generate cash inflow to your business. That is the definition of asset. Otherwise, it's a waste of money. Hello. Do not chase tax benefit to result in a poor business decision. Right? If you have a continued loss, it may not be a good idea to buy equipment now, even though that incentive looks attractive. It's because your business needs more cash for generating profit than a long-term investment. You also don't want to have any. You also won't have any tax benefit, as your business may not have taxable income even to pay any tax to start with. So what's the point? You just keep generating your loss. You can actually opt out for income year on asset-by-asset basis if it is not a good option to you. You need to talk to your tax agent to clarify that, obviously. And there are also 4 things I want to mention about in the business section is extending the loss carryback rules to 2023, which is very good. Many businesses incurred many losses in the recent years. So these allow eligible companies to carry back tax losses from the 2022 to 23 income year to offset previous tax profit and to utilize the tax loss this year rather than carry forward, which is very good. If you can do that, I highly recommend you to do that, or remind your tax agent if they are not aware of it. That will save your tax massive. Next is the government budget offered another recovering loan scheme. If you struggle with your cash flow, you may want to look into that. And also the government budget want to invest a lot in building skills for the future. There are a lot of wages, subsidies, and boosting apprenticeship available. If you want to explore that area of the support, I highly recommend you to do so. It's really worth it, and go digital as well. There's some funding there on different level, federal level and state level as well. If you haven't thought about going cloud or software or something, it is the right time. Never a good time better than now. Individuals, there are just a couple of things I want to highlight. First is the extension of low to medium income tax offset for 2022 year. It has been extended same as last year. Figure stays the same, the tax offset stays the same, are listed on the right-hand side of the same page, which you can refer to. If you don't want to get into the detail, that's fine, totally okay. Your tax agent will be able to handle it. Just make sure if you can manipulate your taxable income, combining with your tax year-end planning, you will see if you just in between some threshold, you want to take advantage rather than not, right? Second is change how an individual's residency is determined. So before the proposal, it's not black and white scenario, it's case by case. So it's to be clarified, strict 138 days to determine if you're the Australian tax residency or not. It's a proposal now, hasn't been passed yet, but it's a good proposal, I reckon, but it will change many people's scenario and tax rate will be different accordingly. And then the next point I want to highlight is the removal of 250 reductions in the amount that can be deducted in the education expenses. Many people will enjoy 100 or a couple of dollars refund more for that. Next section is about superannuation. So the superannuation guarantee contributions increased from 9.5 to 10 from the 1st of July, which is in 1.5 months' time. Increase 0.5 per year thereafter until reaches 12%. It's a good thing for employee, but an extra burden for employer. And also to do with that is another one is abolish of the 450 gross wages threshold. Funny enough is when the budget night alive, it's part of supporting women in the Australian section. It doesn't, from what I can see in the budget, didn't mention the differentiation between women and men in relation of all of these policies. So don't worry, all my male friends, you also enjoy the same deal from the government. Self-managed superannuation fund, it's a short in this SMSF. You heard about SMSF, it's short for self-managed superannuation fund. There are some highlights I want to mention. Not everybody has this kind of structure, so I didn't want to expand it. But these are the things that I think is important. If you have a self-managed superannuation fund, it's about time to retire, just to retire. These things are very relevant with you. You need to check with your financial planner to see what changes it means for you. So first is reduce in the age in relation to downsize your home so that you can contribute more to your superannuation. So now you can, when it's about 61, 62, you can do that now. But or before this budget, you can only do that 5 years older. So that will release many expensive properties into the market, but downsize doesn't mean that you get your second home cheaper. You can actually get a more expensive home if you can afford that. You can still enjoy, meanwhile, you still enjoy the same deal to be able to contribute to your super more. Abolition of the work tax in relation to people aged from 67 to 74, relaxing residency requirements, residency changes extend the safe harbor period from 2 to 5 years, abolish the active member requirement. So all of these combined together is in favor of the people who has superannuation, self-managed superannuation fund. You can put in more money to your super so that when you retire, all the money in your superannuation fund, which generates profit, won't be taxed. So it's tax-free. So you want to put your money into your super fund when you're about to retire. Home ownership, I listed them. I think I only have 2 minutes to go. I want to briefly go through this. Really want to highlight the first home super saver scheme. If you haven't got your first home or your children haven't got their first home, it is a very good scheme, because if you have the saving account ready for 20%, 10%, whatever it is, to buy the first home. Rather, you want to contribute to your super. You don't have to have a self-managed superannuation fund to do that. You can contribute to any retail super that you currently have. Claim it as a tax deduction, which will increase your capability of buying a home. I don't see why you don't want to do that. This is, I will recommend this or advise all my clients who can practically take use of this scheme. It's just a free money, free extra tax refund. You must get onto that if you haven't got your first home yet. Ensure not to go over the annual cap, $25,000. Voluntary contribution made from the 1st of July 2017 can also count towards the total amount released. So this all will be helpful for the people to get their first home. Second is additional places for the first home loan deposit scheme. New home now only requires 5% deposit rather than 20%. And the last is the support for single parents with dependents to purchase a new or existing home. Only requires 2% deposit. Again, the last point was also mentioned by the government on the budget night in the section of supporting women. But obviously, it didn't really limit to female. If you are my male friends, of course, you can also enjoy this policy as well. So finally, I got on time. It's a 1:20. I delivered my webinar content so far finished, and I leave the time for question and answer. And thank you very much. I'll hand over to beautiful Casey.
One question I was curious about is, or maybe your prediction is, how different will this tax year be for the average business or individual? Do you think it's going to be more kind of intensive work, or do you think it's going to be a breeze for the typical business or individual?
Yeah, I think every business is different. Some business or industries are really booming. The other day, I went to this government held event, transport, construction, project-wise, they're all booming now. So it doesn't mean that every business struggle with their cash flow. Some businesses really struggle with managing of their growth. It doesn't matter what business you are in, either you loss or profit. It is very special time. It's different. It's unpredictable. If you rapid growth, then you may have a scenario facing supply shortage and international transport problems, which were always mentioned by international business. So in that scenario, you're facing the issues how to find alternatives. For the business, local, small to medium size of the business, sometimes they face the problem of having a lot of business loss, short of cash flow. Definitely year-end planning will help them massive. You don't want to miss out this opportunity to help your business survive, or even if you don't want to continue it, you want to have an exit plan. It is also very important, because if you want to get out of your business right now, you may get ready now rather than 12 months later, because every financial year is very long. If you wait until, we only have 1.5 months, well, probably just 5 weeks to go. If you miss out this 5 weeks window, you will need to wait for another 12 months sometimes. It's really not worth it. So talk to your accountant and financial planner. This is a very crucial time for any type of the business in this unpredictable world and current COVID situation. Yes. Yeah.
Thank you for that, Meng. So I actually got a couple of questions in the chat right now. Thank you so much, everyone. So Ilana would love to know a good link online for the first home super saver scheme. She'd love to know if you're able to paste it in the chat. I will also say, Ilana, in the thank you message. I'm also going to put a couple links as well that Meng recommends. But Meng, do you happen to know the website? And then I'm able to paste it in the chat while you're talking about it.
Yeah, definitely. You can search the keyword of what you want to look for. Like for example, first home saver scheme. You can look for that keyword, but when you search for the result, definitely go to the government website. Don't go to any company's website to start with. So those informations are the most reliable and up-to-date one. If it is to do with the first home saver account, when the government website will mention about your superannuation, you definitely can go to contact your superannuation account. These advice specifically will be applicable for you, and sometimes their advice is even free. You don't have to pay nobody. They will give you a very helpful, practical, effective advice only for yourself, which is I don't see why you don't do that. So contact with your super, mention about who you are, what your account is, and then ask them what to do if you want to do this, if it is benefit for you, how does it work? Because practically you need to fill in some forms, go through procedures, and make sure the communication doesn't break apart. So it's important that you contact with the super fund.
Very important to have the experts helping out with that.
Yeah.
We have a question from Pam, actually. So Pam wanted to know, is there an age limit to commence the first home saver scheme, or just having a super fund all that is required?
I saw that. From my memory, there's no. Just because my client, when they are in this scenario, they didn't have any problem with getting it. So maybe I can't guarantee what I said is 100% true, but I didn't really encounter anybody because of the age problem couldn't get the first home saver scheme.
Hi, Casey. Thanks. First of all, I would like to thank both of you to have a wonderful session. CSR activity is nothing but they have a charitable services for the people, like a trust. Every companies will have a contribution for their service activities, is contributing to the needy peoples or helping them to that kind of a services. What is your recommendations? Or I have another question, like, is it better to start a company can start a trust side by side to do a better service or to earn better tax benefits? So your recommendations on that.
Okay, all right. Thank you very much for your question. I hope I can answer your question. If I'm not able to, you can ask me again and clarify it. So if it is recommended to park fund on some on some fund of supporting maybe some long-term kind of investment in staff or creative or those kind of things, not readily have a quick return on your investment, I would say that's to do with your business value. That's something to do with your what you want to see to achieve from your business activities. That's the start point. Not every business seeking for profit and money, value is the top level of you doing anything in your business structure. So if it is your focus, if you want to have it in the long run, if you do have spare fund, definitely go there. Because it's very rewarding, not only in money value, but also it make your business activity meaningful. That's the reason why it's there. So, but definitely you need to budget how much I need to put there, how much I need to fund my own business to keep growing. So that's important. But also bear in mind that not every non-for-profit structure will give you a tax deduction. In Australia, it is different, different kind of requirement and registration. So non-for-profit doesn't equal to charity. So you need to bear that in mind and seek for specialists for consulting. If I would definitely say higher profit is always good, because that gives you room and option what to do next. You can use this extra money or funding to keep growing something that you want to grow and expand. For tax-wise, tax is always secondary and it's a factor for you to consider, but it's not a goal. It's not the main reason for you to do something in your business, if that's clear. So if your service business profit is high, it's important, and it is most of the time it's true, because you don't have stock, right? And then but don't forget something. If you want to, you can actually put your labor cost or your time consumed as if it is your stock purchase, because that is your true stock, right? For example, I'm an accountant, my time is my stock, right? I work, say, 7 hours a day, my 7 hours is my stock. So you may want to calculate in a different way and then see how profitable it is in real. So you may move your structure of your profit and loss around. You may put your wages and super up to the gross purchase part to see, so this is my gross margin, if it is good enough for me or not, so that you can really compare with your product sale activity. Don't forget about that.
Yeah, thanks for your great insight, and it really helped me a lot. Thank you very much.
That's okay. Oh, wonderful. Thank you so much.